JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 28th of May 2020. So yeah, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, now then, first of all, I do apologize for the slight late start, as my colleague was running his video before mine. So yep, apologies, like I said, for the late start. Yeah, let's get back to the markets. But before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Also, just a quick update on what's happening here globally. So as we already know, this today the US surpassed the 100,000 deaths from the coronavirus. So yep, and the figure continues to rise, of course. So hopefully that can slow down. But the picture is not very great, even I would say a little bit on the gloomy side. So now then, also, just actually before I continue with these charts, just to let you know, guys, that tomorrow there won't be any Traders Espresso nor Tea Time videos. So I will resume on Monday. So yep, just to kind of let you know. So looking at the picture here on the Nasdaq 100, so the index managed to close yesterday slightly in the positive territory and remain within this pattern here, the one that I talked about, the potential kind of a rising veg formation, which in a way, of course, according to all the TA rules, tends to break to the downside. However, until we get that violation of the lower side of this pattern, we cannot really talk about any downside yet. So in a way, for now, keep your eyes on this, and of course keep your eyes on the price action today. So currently the price is balancing near the 9,354 mark, not far, 55 zone, not far from here. So let's keep an eye on this area, and if eventually we do see a drop below this lower side of the rising veg, and in addition to that, if we also get a drop below the 9,250 zone here, then yes, we could maybe consider some lower levels. Of course, we'll be very careful. Initially, we will target this area right here, the low of the 14th of May, near the 8,860 zone. But then, yep, further declines could be possible. So just to kind of let you know, guys, as well, I mean, this morning I was talking about some data for you to kind of keep an eye on today, and one of the main ones was, of course, the initial jobless claims, which came out as a disappointment again. So yep, it beat the forecast in a negative way, and came out around 2,123,000. So yep, not very good for the US economy. And let's keep an eye on that one, and let's see how the whole market sentiment will be around that today. So for now, like I said, the cash index here is balancing near the 9,355 zone. So let's see if it can continue pushing further down. However, as I said, in order to get comfortable with lower levels, we need to see first a violation of this lower side of the veg, and then a drop below the 9,250 zone at least, and then we'll take it from there. If of course this area continues to provide support, well, the index might reverse back to the upside. But again, that's in the scenario if this lower side of the wedge continues to hold. If it fails, then yes, like I said, lower levels could be met. Now then, the FTSE 100. Now the FTSE 100 is pushing higher today, so this is what I talked about this morning, for you guys to keep a close eye on this one. And basically, it continues to push north, but currently is getting a hold up near the 6,231 zone, which is the high of the 10th of March. And in a way, as you can see, yes, we are leaning a little bit more to the upside. However, as you can see, for now, the price is getting a hold up near this key area of resistance. So we'll continue monitoring this one at the 6,231 zone. If we get a further push north, then yes, our next potential target is around the 6,460 or 6,536 mark. So keep your eyes on that. But again, long story short, guys, for now, yes, we are leaning a little bit more to the upside, but as you can see, it's currently getting a hold up here near this 6,231 zone. So a nice good pop above this could, yep, open the door to a further acceleration. If in case this index reverses sharply to the downside and ends the day below this, below the upper side of the range, or actually below the April high, which is around 6,152 territory, then, well, I mean, maybe not everything is that good in the bull block. So keep your eyes on that one. Gold. So gold pushed higher. However, this is what I talked about this morning, guys. Basically, gold made its way to the upside and got a hold up near this downside line taken from the high of the 18th of May. So we're going to continue monitoring this one, but still, I wouldn't say that this is could be a positive thing. We need that confirmation break first, because again, if this downside line provides resistance and the commodity struggles to overcome this area, then, well, another round of selling could be possible. So that's why, guys, be very careful for now. Initially, if we do see a reversal back down, our main target for now is the 1680 zone, and then we would take it from there. If by any chance we do see a nice daily close above this downside line and above this 1723 territory right here, then, well, I mean, maybe we could start looking at some higher levels again, guys. But for now, be very careful. Brent oil. So Brent oil is not giving up, and or should I say, the bulls are not giving up and they're trying to push the commodity higher. Now the black liquid is still balanced, well, still moving below this downside line taken from the high of the 8th of January, but yeah, for now you can see we cannot really talk about anything. Probably will remain a little bit on the neutral side, because even with the downside, we would prefer to wait for a drop below the 32.21 zone, roughly around here. That's marked by the high of the 6th of May, and in addition to that, a drop below this area would place the price below the 21-day EMA. And yep, especially if this, let's say for example, this daily candle, if a daily candle closes below this area, then yep, deeper extensions to the downside could be possible. But for now, you can see that the bulls are trying their best to keep this one afloat. However, we need to see a nice good push above the 36.10 zone, and ideally a daily close above that area could do the trick for more buyers. Bitcoin. So quick update on this one. There's not much to talk about here, but this morning I talked about, well, not this morning, but yesterday I mentioned this one, and what I was saying that that in a way, for us to maybe start looking at some higher levels, we would prefer to see a push above the, or should I say, we should wait for a push above the 9,300 level and then kind of consider a possible move higher. But even then, we cannot really talk about any much higher levels, only up until here somewhere, up until this 10,000 zone, or the downside resistance line, this long-term downside resistance line taken from the highest point of December 2017. As you can see, it can kind of the crypto is struggling to overcome it for now, but if eventually we do see a pop above this, then yes, we will aim for for higher levels. And for now, from the very short-term perspective, if we see the daily candle staying above this 9,300 zone, then yep, the next target for us could be around that psychological 10,000 zone, and then we would take it from there. The downside scenario for us would be somewhere from around here near the 8,455 mark. AUDUSD, very quickly here. So just a quick update. So the pair continues to balance above this barrier right here, the 0.6570 zone, and it seems that it's trying to make its way higher. It's currently floating above the 200-day EMA. However, in order to aim for higher levels, we need to see that confirmation break above the 0.6677 mark, which, as you can see, acted as a fantastic area of resistance recently, and also it played the role as a resistance on in March, which is it was the highest point of near the highest point of March, and as you can see, it also acted as a good support back here in February. 2020, of course, and October and September and August, there we go, 2019. So we need that confirmation break, and basically probably will drag this highlighted area right here, because that's going to be the more important level for us right now to watch. So a nice good pop above the 0.6677 mark could do the trick for more buyers. So that's why, guys, for now, be very careful. And in terms of the downside now, if in order to aim for lower levels, we would like to see maybe, we would like to wait maybe for a drop below the 0.65 zone, roughly around here, and then aim for the downside. For now, we're leaning a little bit more to the upside still. So let's see if the pair can push further north. If we do see eventually a nice daily close above the 0.6677 zone, then, well, the next target here could be around the high of the 30th of December here, near the 0.7032 zone. So keep your eyes on that one. NZDCAD, so quick update here. So the pair is trying to make its way higher. Again, I've looked at this one this week, and basically I was telling you guys to keep a close eye on this downside line taken from the highest point of March 2019. As you can see, we're getting again back to it, and we're getting closer to it, and it seems that the pair does want to move higher. However, as I mentioned before, in order for us to get a little bit more comfortable with higher levels, not only that we need to see a break of this downside line, but also we would like to see a nice daily close above the 0.8575 zone, roughly around here, and only then we will aim for further higher levels, because again, what we don't want to see here is what we had, for example, this week, where we had false breakouts here above this downside line, and the rate still kind of ended up being below this downside line. So for now, like I said, this is the level for us to watch, the 0.8575, and then we would take it from there. Quick update on US dollar against the South African rand. I talked about a lot about this pair last week, and basically we had our kind of rejection here from the 17.8430 zone, and you can see that the pair drifted below the low of last week, which was around the 17.52 zone, roughly around here, guys. So the pair continues to slide, and of course, for now, the next target for us is this area right here near the 17.1728 zone. Yep, that's the low of the 25th of March, and slightly below that we do have the 100-day EMA here, which could also provide a bit of support. So basically, for now, we're not going to drag this one way to the downside here. We're just going to drag it up until here, somewhere near the 17.1728, or like I said, this 100 EMA on the daily chart. So we'll keep an eye on that one. US dollar against the Japanese yen. So just a quick update here, because to be honest, it's stuck here, it's not doing anything today, so we're still waiting for this pair to exit this pattern. We do have well, I cannot really say that this is a nice ascending triangle, but basically we do have this very strong area of resistance here near the 108.08, and in a way, for us to get comfortable with higher levels, we would like to see a nice good pop above this first, and and then we could aim for higher levels. Again, we're not going to drag this one. If we do see something like this, we're not going to drag this one too much to the upside. We're just going to aim for the 109.38 zone, which is marked by the high of the 6th of April. So for now, keep your eyes on this little pattern. And in terms of the downside, well, as you can see, for now the pair is kind of balancing above this short-term upside support line taken from the low of the 7th of May. Now it is a bit tentative. However, we'll keep an eye on this one, and what we're going to do here as well, we're going to keep an eye on this little level here, the low of the 22nd of May, which is the low of last Friday, and that's roughly around the 107.32 zone, roughly around here, guys. And a drop below this, well, would already place the rate below the upside support line, and it would also place the rate below the 21-day EMA. Maybe some bears could see this as an opportunity to step in, but again, like I said, we'll keep it short and simple. We're not going to drag this one too much to the downside. We're just going to aim for the 105.94 zone, which is, as you can see, acted as a very good area of resistance back here on the 10th of March, and also acted as a very strong support level on 6th of May, and actually it acted as the lowest. It's the lowest point of May. So yep, keep your eyes on that one, guys. And finally, euro dollar, so it continues to move higher. However, this morning I talked about this one, and it still remains below this territory right here, the 1.1039. I talked about this level. That's the high of the 1st of April, and it seems that for now the pair is struggling to overcome it. However, we still have the full US session to go through, so let's see if eventually the pair will be able to overcome this barrier. For now, yes, we are leaning a little bit more to the upside here. However, given that it's kind of finding this level very difficult right now, or to just say up until right now, we would prefer to wait for a nice good push above this, and then aim for further acceleration to the upside. So yeah, keep your eyes on this 1.1039 zone. If we get a nice pop above this, then yes, the next levels here to consider, or should I say the next level to consider here, could be around the 1.1147, marked by the high of the 27th of March here. So yep, keep your eyes on that one. If by any chance this sharply reverses back down and drops back below the 1.0990 zone, then well, I mean, maybe the pair is not ready to move higher, and we could see a move back down here within this previous range, and where we could target the 1.0875 level, the one that I talked about previously this week. So yep, for now, guys, keep your eyes on this one. But like I said, we are leaning a little bit more to the upside here on this one, but preferably we would like to see a push above the 1.1039 level. So like I said, I'll repeat myself again, guys. Tomorrow, and we won't have any traders espresso nor tea time. So yep, we'll resume everything on Monday. So I hope you have a wonderful weekend, everyone. I hope you have a fantastic trading day tomorrow as well, guys. So yep, I'll catch you on Monday, and thank you very much for watching and listening. I really appreciate your time, guys. Thank you very much, and bye bye.